you take 100 people, 20%, aren't going to engage with you at all. Another 20% already know, and they know, love, and trust you, right? They're already in, they're bought in, you don't have to explain anything to them. It's that middle 60% that has some varying level of knowledge. So, if I'm talking about the investor, how do I make sure that, they are comfortable with good egg, right? In that role that I was in, but with anybody, how do you make sure they're comfortable with your business? Now, the flip side is if you are the one doing the capital raising, you have to risk mitigate your investment by making sure that investor knows the risks involved in the investment.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Whitney, welcome to the show.
Thank you so much. It's such a pleasure to be here.
Pleasure's all mine. The same three questions I ask everybody who comes on the show is, where did you start? Where are you now? And very quickly, how did you get there?
Oh my gosh. Well, we can spend a lot of time there. So I started in 2002 with buying a house with a significant other. The relationship fell apart about a month later. And guess what? I had a house. I didn't know what to do. Everything was in my name. I was scared. And so I was young and I guess kind of dumb. I, stuffed that house full of roommates. The house actually required quite a bit of repair. Because I didn't think in my right mind that I would be able to keep that house. Fast forward 11 months later, got the entire thing repaired. And, YouTube didn't exist back then. I had to buy the Home Depot 1, 2, 3 book to do all these repairs myself. And sold the house, which was actually, in hindsight, probably my number one investing mistake. And turned a profit, of about $52,000. And then I realized I actually had not been paying for any part of that mortgage that whole entire time. And moreover, I've been putting money in my pocket every month. And that's when it kind of dawned on me, this is the best thing since sliced bread. How many more of these deals could I possibly do? Right. So, and then from there, I, scaled up a portfolio, generally live-in flipping and house hacking, did a few more deals that way. And my husband joined me a few years later, and we realized we were, accumulating piles of equity, but we hadn't unlocked this golden handcuffs for ourselves. And we realized we needed to transition into buy and hold real estate cash flow. So rentals, you kind of head slap. There's a reason why people have been buying real estate and renting it out for years, right. Thousands of years, actually. And we scaled up a portfolio of 30 BRRRRs or rehab properties. And then we're still doing some flipping on the side, live-in flipping, just regular flipping. And then we transitioned into multifamily real estate when my husband decided he wanted to have the ability to step away from his job. So, here we are today. We've focused very, very intently in the past 4 years on our multifamily real estate. And, where am I at now? Well, I'm trying to, just kind of balance back up the portfolio between real estate that I have in partnership with and then that I directly own.
Interesting. Now that's, there's a lot of things of obviously, and I always put the caveat, quickly in there, and you hit that. So good job. I know that's a tall order. What was the transition, when you said, okay, we single family, now we're going to multifamily. How did you get your first deal done? What does that look like? I mean, walk us through that process.
Well, so our first rental, so, I'll set aside the live-in flipping and the house hacking part of the story, because that was really just buying the roof over your head, right. Where you were going to live and utilizing the tax code or taking advantage of the tax code, really. I mean, it's legal to live in the property for 2 years, get it repaired, and then sell it at a capital gain and not pay taxes on it. I mean, that's one of the easiest glide paths into real estate. And it's so powerful. I don't think people realize how large of a gift that is from the IRS right now.
Right.
Yeah. But when we transitioned to rental real estate, for some reason, and I work with investors in my coaching business. I mean, all of a sudden, the deer in the headlights process. They forget all about the translatable skills that they have if they've already bought a primary property. And that I was no different. All of a sudden, I'm like, oh my gosh, I'm not living there. What kind of loan do I get? Who's going to insure this property?
Right.
are they really going to pay every month, like on time? Why would they do that? Like, I don't understand. So those, how we got our first property is we bought a property in our own backyard.
Mm,
So literally down the road about 10 miles in Westminster, Colorado. Actually, Broomfield, apologies, Broomfield, being very close. The two towns are close together. And, we didn't know what we didn't know. I hadn't stumbled across bigger pockets. I really hadn't even read a book about on how to analyze a deal property. We had capital. Other friends were doing it. So we were like, okay, this looks like a great property. It probably will hold its value. Back of the napkin math, I'm probably making $300 or $400 a month. And I didn't include any sort of CapEx, maintenance, vacancy expenses. So that $400 a month was really only profit if the toilet didn't break or the fence didn't blow down, which all those things did happen. Now, we totally lucked out. We had some amazing tenants. We had bought, we had not ignored the number one rule of real estate, which is location, location, location. I had already violated that rule before with the previous flip. So that much I knew. I had checked that box. But when it came to actually like analyzing the numbers, it was an epic fail. So we closed on that property at the end of January. I stumbled across Bigger Pockets the next month, maybe 2 weeks later, joined one of their classes on how to analyze a deal. And I went, oh crap. I'm like, cash flow, I think was like 1.8%.
wow.
After
Annually or monthly?
Annually. Oh my gosh, it was 1.8% monthly. Like I would have been
I was
amazed.
like, wow, that sounds pretty good to me. I mean, almost 2% a month.
No,
Sure. Yeah.
no,
Okay,
my cash
annually.
on cash return annually was 1.8%
Wow.
after I had taken into account for all the expenses related to the property. And I went, okay, I'm doing better than having my money sitting in a bank. Fairly. But that doesn't take into account the, any sort of depreciation losses I was getting on the property or, anything like that. But that's really where I quickly transitioned into learning how to invest out of state because at the same time we were trying to buy another property here in Colorado. And I'm like, it takes $80,000 at that point in time to get into a property and get it off the ground. And I'm like, I want to have two properties, each cash flowing 1.8% a month. That path to financial freedom is going to be so long. I need to find a different way. So I learned how to, underwrite properties properly, research markets. And by that following April, I had two properties out of state.
That's awesome. And these were all both in the single family space.
Yep.
Go ahead. I'm sorry.
I was going to say one in Indianapolis, one in Kansas City. And by the end of that year, I had 10 properties out of state.
Wow. Good for you. That's awesome. That's awesome. When did you transition to multifamily?
Well, so about 2 years after that, we had scaled in that interim, after that first year, we decided to transition into, I had learned about the BRRRR, like how do you buy a property below value, rehab it, tenant it, refinance your money out. So recycle the same capital over and over again, because we didn't have endless supplies of capital. So we had to get crafty. And so we scaled up to about 30 units. And that took about another year and a half after that. And then I went to my husband and said, hey, look what I've done. Isn't this amazing? I would love to spend more time with our daughter at home. I mean, she was super little. And, that was just, where I wanted to focus was being with my family.
Right.
And he said, awesome. I want some of that. I'm like, wait, we did not include that into our financial plan. Now I head slap, right? Like I'm going like this. I'm like,
Right.
why didn't we like plan for both of us to step away from our jobs? But at the time he said he didn't want to. But at that point in time, I was celebrating because I'm like, yes, he's coming to the dark side. He sees the power of real estate. And my heart sank because I'm like, I have to do probably at least another 40 or 50 more of these properties to get him out of his job because he had all the benefits attached to his job.
Right.
And I'm like, I don't know if I've got it in me to do another 50 BRRRR type properties at the same clip that I had been doing them at.
Right.
So And that's when I was like, okay, we got to figure out, scaling business. How do you scale? How do you add more doors? Like, I'd been in retail, up until that point in time. I'm like, all right, we have to find a pot of money and we have to be able to close on more doors with one transaction. So that's where we transition into multifamily real estate.
That's awesome. Yeah, and that's a great feeling, when okay, I can step away. This is now working the way it should. I'm sorry it wasn't met with the enthusiasm maybe that you were hoping for. I'm like, oh crap, we got to do this again. How did you find your first multifamily deal? How did you fund it? What were some challenges you ran into? And then how did you grow that portfolio?
Yeah, so that's kind of the interesting part of the story. And Sam, and you and I go way back on this. I actually skipped buying the whole multifamily property myself. Now I had done a duplex and triplex and a quad, right? Like for me, that's more residential real estate, but it technically falls in that multifamily realm. But I hadn't been pushed to go find a 6, 10, 20, 30 unit on my own.
Right.
So at this point in time, I'm trying to, you're scaling, all your systems are breaking down. I need a new realtor, a new lender. I need maybe even a new market. I need a new way of analyzing the deal. And, some of my skills translated, but, I definitely had to re-engineer everything. Well, I had also invested in my IRA passively in a couple of multifamily deals where I was a limited partner.
Right.
And the whole entire time I'm sitting here, comparing what I could find in the market and acquire myself versus what was, the returns I was getting in my IRA, and really paying attention to how they were running that business. I'm like, I'm not beating the market, or at least that. So I was like, you know what? That's when it really dawned on me that most people who have success in multifamily real estate partner. And so that's what I focused on next, was trying to find partners to go into business with. And so I found, and that's where you and I met, is when I was working with Good Egg Investments. And so I joined Good Egg Investments as their first team member and their director of investor relations and operations, and, scaled up my portfolio of passive investments through Good Egg Investments, and doing some active deals on the side as well.
Right. Now that's awesome. I mean, because you got to come in, and again, we participated on deals together, which has been, awesome. And I've enjoyed that, but you got to come in with Good Egg and participate not only as a limited partner, but as a general partner on these deals as well. No?
Mm-hmm. Yep.
Right. And that's a great way to scale. Talk to us about that method, or that approach versus going out maybe and just, being the direct, or being the sponsor of the deal yourself out of the gate.
Well, for me, I've always, and this has been my whole life, anytime I want to make a pivot within my career or learn a new skill, I'm first try to understand, how can I get paid to learn? Right. How can I and it's not so much like, how can I make money? Right. Because there's an exchange of value there. Like, I knew I had a skill that they needed. I had come from an operational and business background. Right. And so that's very valuable to a business. So it's an exchange of value that we created together.
Gotcha. That's fantastic. And now walk me through that process, because I think and I've had Annie Dickerson on the show. I think she came on show 8, if I'm not mistaken. And the process with Good Egg, they came in basically on the front end, and I know things have changed, but as capital raisers with other sponsors, correct?
Yeah, I mean, not direct capital raisers, but yeah, kind of a hybrid model for sure.
A hybrid model. That's awesome. What were some key things that you picked up when as you went through that process? You said, okay, I really like this, and that's something that other people should implement.
Yeah. So for me, what the business needed was somebody to play catch to everything that, all the different operational pieces of the business. One of the strengths I brought to the business is coming from a sales background, be it, when I was in public health, or working in, a community pharmacy. Like, I had to convince people to make behavior changes that they did not want to make. I don't care how you slice it, that's a sales job. So, I mean, this is something I don't talk about, in depth on a lot of podcasts, but one of my first public health jobs was, trying to educate commercial sex workers on condom negotiation. Like, there's nothing much harder than that. Maybe working with an addict and trying to help them, use a clean needle. So I succeeded there. I'm like, I can sell ice to an Eskimo, but you have to be passionate and believe about the product that you're selling, right? And for me, I had already come in knowing about the power of real estate. And so it was really, I felt this was more about how can I connect with as many people as possible and educate them about the power of real estate. And if you choose not to do it actively yourself, how can you get involved in another person's deal passively and create immense amount of leverage in your life, by investing in an operating business, by a credible known operator that has a track record and has the skills in place. They have the credit, they have the network, they have the team, they have other investor money coming in to access the deal, right? That is the main difference for me. You ask the question like, okay, why didn't I focus more on doing it myself? Well, I didn't have the investing network, but I had the knowledge, right? And I think there's a power in, plugging people into an already an existing network if they can. Now, certainly, like once you learn those skills, it's definitely, probably tempting to go out and strike out on your own. And I know a lot of people do. But I think that kind of helps clear the hurdle because you're getting kind of paid for the education. Two, you're providing an immense amount of value exchange there. And three, you're building your own personal network at the same time, setting you up for better success if you do want to strike out and do it on your own, I guess, at a future date.
Right. Those are great points. What was, and maybe you already said this, and I apologize if you have to repeat yourself, but what was your role there with Good Egg?
Yeah, I was the director of investor relations and operations. And
Okay.
so my job was, with a title like that, those are generally split into two different jobs.
Right, right.
So I kind of was a catch-all to the entire business. But, over time, majority of my role focused just on the investor experience. Like, how did they learn about Good Egg, actually get into the ecosystem of Good Egg? And then how do we develop that relationship in order for them to feel comfortable in investing their hard-earned money? Remember, up until this point in time, majority of these investors are trading time for dollars. Now, it might be leverage, maybe they have their own business, but I would say majority of the investors that I encountered, were high income earners, and possibly even self-employed. So, there's still, if you're talking about cash flow quadrant, Robert Kiyosaki's work, they're still on the active side of the income quadrants, the E and the S quadrant. So how can I educate them that this investing in syndication is a powerful investment, relatively risk mitigated? How does the company I work with risk mitigate that? And then at the end, like, how are we shifting their income to the B and the I side of the quadrant?
That's an interesting discussion because I think, for a lot of us, when we raise capital, we speak with people who already know about this business, right? Like it's, I don't know, I'd say probably 9 out of the 10 people that I have new investor calls with, it's somebody that already has at least somewhat of an understanding of what's going on. But you were starting, it sounds like, with people that have more or basically no knowledge at all.
Yeah, I think it's, when you look at like sales, right? You take 100 people, 20%, aren't going to engage with you at all. Another 20% are going to, already know, and they know, love, and trust you, right? They're already in, they're bought in, you don't have to explain anything to them. It's that middle 60% that have some varying level of knowledge. So, if I'm talking about the investor, how do I make sure that, they are comfortable with Good Egg, right? In that role that I was in, but like, with anybody, like, how do you make sure they're comfortable with your business? Now, the flip side is if you are the one doing the capital raising, you have to risk mitigate your investment by making sure that investor knows the risks involved in the investment, right? So it's not so much having a conversation like, hi, like, what do you do? Like, how much money do you make? How much do you want to invest? Great. Do you have any questions? No, it's really, which I mean, I passively invest myself even now. I mean, I've had those conversations and I get off the phone. I'm like, they don't know anything about me.
Right.
Like I could be a terror to work with and they haven't even like sussed that out. Right. That is something that, an operator, when they get on the phone with an investor, they need to understand truly where does that investor fall in that educational continuum,
Right.
help them figure out the resources and fill in the gaps. I mean, they don't need to handhold them, but definitely have resources to help fill in the gaps. But risk mitigate their own business as well. Like, get kind of like a temperature check and a personality check on, is this person going to make a good partner? I mean, even though they're a limited partner, are they going to make a good partner? Because you're going to be in business with them for 5 years, 7 years, 10 years.
Yeah, talk to us about that. What were some things maybe that would give you pause when an investor came to you and you said, maybe this isn't a good fit for us?
Yeah, I mean, I think on an initial level, just the interaction you have with somebody, like what kind of gut feeling do you get from them, right? Or do they seem personable? Are they somebody that you can kind of get along with? And that has varying degrees in and of itself. I mean, I don't need somebody, when I'm conducting an investor relations call. I mean, it doesn't have to be all roses, but are they treating me kindly and politely? Are they respectful? Those are things that I look for in, with a limited partner. Two, after that, I would challenge, like, what kind of questions are they asking? Right. I think the questions are going to clue you into their level of knowledge and expertise. Now, I've always invited questions. There are no dumb questions. I want to know if you have any, and let's get them solved now, because you're less of a risk, the investor's less of a risk to the investment for me if they have all their questions. I mean, I've had investors that have closed on a deal and then came back, and then all of a sudden they have a laundry list of tax questions and legal entity questions. And while I'm not not giving out tax or legal advice, I'm really like, whoa, these all should have been asked up front. How did we get this far? And now these questions are out on the table. So, if that does occur, I'm trying to fill in those gaps as quickly as possible.
Right. Yeah. On the investor relations side, I'm sure as you receive that feedback, you go, oh, okay, maybe this is something we need to put out some more information on.
Yeah, make it part of the investment process, the investment deck. Ask that in our investment calls, or just bring in more experts, to talk about those topics and put that information out.
How did you do that? How did you bring in more experts in the onboarding of investor process?
So, there's a couple different things. One, just putting together. I mean, both of them are, are going to kind of seem fairly direct and simple, and it really is. One, putting in the investor's hands a resource document that if you have questions about, taxes, here are some people that we suggest talking to, and giving more than one option. Because if you give one option, it's a recommendation.
Right.
I come from public health. You can't, the R word, recommendation, is illegal for me to say as a public health worker. I cannot say recommendation. I can say my suggestion, here's some advice. But the R word is reserved for somebody who has a PhD or a Juris Doctorate. Like, that's the world that I come from. So making sure that you put, together a resource document for that investor to engage in, and maybe putting it in front of them more than one time. And two, another thing that I really enjoyed doing is I would conduct a weekly webinar. There would be an educational topic, involved there, but also I would stay around to answer Q&A. And sometimes those webinars, I would bring on one of those people in my resource document, my favorite people to work with, just to talk about all these questions that we've been accumulating over time. And those type of webinars, the expert session webinars, were, highly valuable, right? Again, it just boosts the level of the operator's know, love, and trust factor. But, again, you get that investor to yes faster.
Right. And that's ultimately, not ultimately getting the yes is not the end all be all necessarily, as we just talked about. Maybe sometimes getting them to know.
Or no, yeah.
Right.
Close that gap.
Right, right is the other answer. What so fast forward now to where you are today. So that was what you did with Good Egg, which that's awesome experience, and that built the launch pad for where you are and where you're going next. What does that look like?
Great question. Yeah, so I am, right now I'm focused. I've always had a coaching and consulting practice, helping, investors acquire like their first couple of properties and scale up to 20 to 30 units. And so, I've been working on, I shouldn't call it a side project, but I've been working in that business for about 4 or 5 years now. And so I'm just continuing to enjoy that work. Right now, my daughter's still at home from COVID, homeschooling from home. So I'm a parent, I'm a wife, I'm a mom. so, so I'm definitely focused in those areas, and then just expanding my own portfolio. I mean, I think that is, something that can be a challenge for investors, and why, investing as a limited partner can be so attractive is that, I need to grow my own portfolio. And it was challenging for me, even working within the business, to find the different type of investments that I wanted to invest in. I'm super heavy into real estate and multifamily real estate. And so like you and I were talking before the show, it's like, how can I diversify my portfolio into other non-correlated real estate assets? And even, my eyes have been opened up to passive investing beyond real estate, if you can imagine that.
Right. No, that's awesome. That's awesome. I've really enjoyed this. We're unfortunately out of time. I've got so many more questions to ask you, but what do we do? Here's, I guess before we jump into the final four questions, is there anything else really here on your journey that you'd love to share with our investors that you might think would be beneficial to someone who's looking to scale their portfolio?
Yeah. So, if we're talking about actively or passively, I think really, as I work with investors, the number one thing is analysis paralysis. People stay in the data gathering stage so long that they forget that they have to take massive action. Like if you don't take action, you don't have any progress.
Right.
And so really making sure that you are setting a timetable on yourself in order to take action, whatever that action looks like. So, we're really good about holding appointments for other people and attending work meetings and meeting those deadlines. Set that type of thing for yourself. Okay. You have a business, treat it as such. Your investing is a business.
That's awesome. I love that. I love that. It's great advice. Final four questions for you are this. If I gave you just $20,000 to invest in real estate with no previous real estate investing experience, what would you do with it and why?
Ooh, this is again another thing that I run into quite often. $20,000, is a challenge. Like, what do you get started with? You have to invest in yourself first, right? You have to invest in your knowledge. Now, do you have to spend $10,000 on working with a guru? No. I don't. I think there's a time and place for that, but you have to start somewhere. Get involved in a mastermind group, read some books, attend meetings, attend a conference. Right? Conferences, I think, at the very beginning are great crash courses to highlight some skills that you might need, get introduced to the mindsets that you might need, but network, right? You're going to need mindset skills and networks in order to succeed.
Yeah, absolutely. Absolutely. That's a great piece of advice. Second question for you is this. If you could help our listeners avoid just one mistake in real estate, what would it be and how would you avoid it?
I think the number one biggest mistake is inaction. So, treat this like a business, right? And if you are, self-employed, this is just another arm, of your business. Set the deadlines, like set your strategic goals, make sure they're measurable, make sure that they're, relevant and time bound. If this is a new concept for you, find somebody who's already done this or is at the next level that you want to be at, and get as close proximity as you can to them. Maybe be in the same mastermind group with them, attend the same meetings, reach out to them and see if they will mentor you. I mean, there has to be some sort of a value exchange there. That's why a lot of mentors do get paid for their services, but definitely get in close proximity.
Right. That's great. That's great. When it comes to investing in the world, what's one thing you're doing right now to make the world a better place?
I am very passionate in making sure that kids, especially like in my sphere, and I'm working with a partner here in the community that I live in, are educated on finances. What is money and how does it actually work? That's super passionate for me. I mean, and I can't say that I have all the education there necessary, but it's called being a leading learner. So that I think, just being empowered to take charge of your finances earlier is probably one of the best gifts that we can give the next generation.
Oh, for sure. And if you look at our public education school curriculum, that you'll learn how to do calculus, but not basic finance by the time you graduate high school, which is astounding. So good for you for doing that.
Well, I have a really quick story if you'll allow me to share.
Go for it.
Yeah. So this is pre-COVID, a couple years ago. I was invited to, parent teacher day. Like I kind of went into the classroom and my daughter, or the teacher actually invited me into the classroom to kind of introduce what I wanted to do. My daughter was like, Mom, please don't talk about money. Please don't. Like, I mean, she's 7, right? I'm like, oh my gosh, I'm embarrassing my child at 7.
Right.
I'm like, okay, how can I make this as fun as possible? So I gathered up some Monopoly money, went into the classroom, and I divided the class up into 3 businesses. Like there was an ice cream shop, a soda shop, and then like a candy shop. And you would not believe at the end of the hour, like they understood income, expenses, assets, liabilities. And I'm like, if they only got those 4 words, that's all I need them to know.
Right.
They figured out themselves how to partner their 3 businesses together to make an ice cream shop that sold candy and sodas together. At 7. So, there's so much power there to be harnessed, so much brain power to be harnessed there, and enthusiasm too. So, we hold off in teaching these skills to high school. I don't understand why.
I don't either. And you at best at high school. I mean, it's that's awesome what you're doing there. I do appreciate that. Whitney, if our listeners want to get in touch with you, what's the best way to do that?
Yeah, you can find me at ashwealth.com. You can also reach out to me via email at ashwealthco@gmail.com.
Awesome. Whitney, thanks so much. Do appreciate it.
Yeah, thank you for having me on.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.